So let's do question number 1. Mr. Sivam, a retail trader of Cochin, gives the following trading and profit loss account for the year ended 31st of March 2018. Now let us look at the trading and profit loss account for the year ended 31st of March 2018. So there was an opening stock of rupees 90,000. Purchases made during the year were 1 crore 10 lakh 4,000. Sales for the same period was 1 crore 12 lakh 11,500. And there was a closing stock as on 31st of March 2018 amounting to rupees 1 lakh 86,100. So as per the trading count, there is a gross profit of 3 lakh 3,600. Now we move on to the profit loss account. Let's look at the expense side. Salary of rupees 60,000 was paid during the year. Rent and rates and taxes were 36,000. Interest on loan 15,000. Depreciation 1 lakh 5,000. Printing and stationery 23,200. Postage and telegram 1640. So there was a loss on sale of shares, which is short term, 8,100. Other general expenses 7,060, and total net profit was 50,000. Some additional information is also given. It was found that some stocks were omitted to be included in both the opening and closing stock. The values of which are given. Opening stock rupees 9,000, closing stock rupees 18,000. Second, salary includes rupees 10,000 paid to his brother, which is unreasonable to the extent of rupees 2,000. The whole amount of printing and stationery was paid in cash by way of one-time payment. Now the depreciation provided in the profit loss account, rupees 1 lakh 5,000, was based on the following information. The written down value of the plant and machinery is rupees 4 lakh 20,000 as on 1st of April 2017. A new plant falling under the same block of depreciation was bought on 1st of July 2017 for rupees 70,000. Two old plants were sold on 1st of October 2017 for rupees 50,000. Rent and rates includes a sales tax liability of rupees 3,400 paid on 7th of April 2018. Other general expenses include rupees 2,000 paid as donation to public charitable trust. Now you are required to advise Mr. Sivam whether he can opt for presumptive taxation under section 44 AD, and if so, whether it would be beneficial for him to declare the income as per section 44 AD. Assume that he has not opted for presumptive taxation scheme in any earlier previous year. Also assume that whole of the amount of turnover received by account by check or use of electronic clearing system through bank account during the previous year. So let's answer this question. So first of all, we will look at certain notes. The first note is with regard to the depreciation. Now in the question it is given that the written down value of plant and machinery is rupees 4 lakh 20,000 as on 1st of April 2017. A new plant falling under the same block of depreciation was bought on 1st of July 2017 for rupees 70,000. Two old plants were sold on 1st of October 2017 for rupees 50,000. So let's calculate the depreciation as per income tax rules. Now it is given that the written down value of the block of plant and machinery as on 1st of April 2017 is rupees 4 lakh 20,000. Now we are going to add the cost of new plant and machinery purchased during the year. It was given as 70,000. Now we will deduct the sale proceeds of the assets sold within the same block, which is 50,000. So which means that the written down value of the block of plant and machinery as on 31st of March 2018 would now be 4 lakh 40,000. Now we calculate depreciation as per the income tax rules, which is 15%, will come to 66,000. Now here one should note that no additional depreciation is allowed as the cessee is not engaged in manufacturing or producing of any article. Now we come to the second note. In the question it is given that rent and rates includes a sales tax liability of rupees 3,400 which was paid on 7th of April 2018. Now since the sales tax liability has been paid before the due date of filing of the income under section 139(1), the same is deductible. Now let us look at the computation of business income of Mr. Sivam for the assessment year 2018-19. Now there was a net profit as per the profit loss account which was given as 50,000. Now we will here add some of the expenses which are inadmissible in nature or some losses. The first one is the undervaluation of clothing stock, which is rupees 18,000. Now this has been added to the profit because it will increase the profit because it was not shown in the profit loss account. The second one is salary paid to the brother. Now in the question it was given that the salary include rupees 10,000 which was paid to his brother, which is unreasonable to the extent of rupees 2,000. Now that will be added because unreasonable amount which is paid to the relatives are disallowed under section 40A subsection 2. Then we come to printing and stationery. Now whole amount of printing and stationery paid in cash would be disallowed since such amount exceeds rupees 10,000 and this is as per section 40A subsection 3. So 23,200 will be added back to the profit. Now we are going to add back the depreciation as per books, which is 1,05,000. The short-term capital loss on shares will also be added back because it is not allowed as a loss expense under the business. Donation to public charitable trust will also be disallowed to the extent of rupees 2,000 and it will not be allowed as a business expenditure. So altogether the inadmissible expenses or loss 1,58,300. Now we will reduce certain items. Number one, undervaluation of opening stock. Since opening stock was omitted from the profit loss account, so this will reduce the profit now because we will be taking into account. So 9,000 will be reduced from the profits. Income from UTI. Now this is exempt under section 10 subsection 35. So this will be also reduced from the profits. So it will be 2,400. So altogether reductions will be to the extent of 11,400. So the business income before depreciation will be 1,96,900. Now we are going to add the depreciation as per the income tax rule which we have calculated earlier. So it comes to 66,000. So which means that the business income now would be 1,30,900. Now we are going to calculate the income on the basis of presumptive scheme under section 44AD. Now the total turnover is 1 crore 12,11,500. And under the scheme, 6% of the turnover will be treated as business income. So that comes to rupees 6,72,690. Now since the assessee has received all the money through account paid check or through the use of electronic clearing system, so he can opt for the presumptive scheme under section 44AD. Now, Mr. Sivam is eligible to opt for presumptive taxation under section 44AD since his turnover does not exceed 2 crore in the previous year 2017-18. Now, we have calculated his income as per the normal provisions of the Act and we found it is lower than the presumptive income of rupees 6,72,690 which we calculated earlier under section 44AD. Therefore, it is beneficial for him to compute the business income as per the normal provisions of the Act. But now here we should note that if he does not go for the presumptive tax provisions under section 44AD, since his turnover has exceeded 1 crore, so he has to get his books of account audited under section 44AB. Now here you must understand some very important rule under section 44AD, that if you are opting for presumptive scheme, you must file presumptive scheme for at least 5 years in continuation. But if you decide to show and file profits as per the regular business before the end of these 5 years, you will lose presumptive benefits and disallowed from presumptive taxation for subsequent 5 years. Now, the 5 years shall be counted starting the year in which you first file usual taxes for such businesses. Therefore, if Mr. Sivam declares income as per the presumptive tax provisions of section 44AD this year, that is the previous year 2017-18, and he does not opt for presumptive taxation in any of the 5 succeeding years, that is from previous year 2018-19 to previous year 2022-23, say for instance in previous year 2018-19, then he will not be eligible to opt for presumptive taxation for 5 assessment years succeeding the assessment year 2019-20 relevant to previous year 2018-19.